In the meantime, let's shift focus and let's now welcome on board the management of BEL. They're joining on the show right now. We have with us the CMD, Amit Banerjee, joining in.
BEML, actually.
BEML, I beg your pardon, sorry. The company recently, of course, bagged an order from Coal India and recorded its highest ever turnover as well in the month of May. So let's talk about all of this. Mr. Banerjee, hi, good afternoon. Good to have you on the show. Your revenues have declined year on year, though grown sequentially. Just wanted to understand, firstly, talking about your earnings, and I'll come to, other things in just a bit. What's the outlook on revenue and profit growth going forward?
So Q4, if you see, the VOP portion, if you see the volume of production, it is more. It is more than the previous year. Yes, on the sales front, there is a downtrend is there. That's because in the last year, we were able to sell the MEMUs, the mainline electric multiple units. So that accounted for almost around 400 crores. So because of that, the Q4 revenue was more in that particular year. But overall, if you see the year-on-year performance, we have grown by more than 15%, almost 16% we have grown the revenues. And last 2 years, we have been growing 15%, and we hope to keep the same trend. See, if you see the mining and construction business and rail and metro business, that's been growing in the range of around 5 to 10%. But in the defense business, we have seen a very good growth. Last financial year, it was almost about 60%. And the similar kind of growth will be there in this financial year also for defense. So overall, we are seeing and around the same margin, this thing, and 15 to 16% growth in this financial year also.
Right. So you did mention that the input price rise of steel and aluminum has impacted the company. How is it that you've managed to negate that impact, and how's that impacted your margins?
As I mentioned earlier, for our mining and construction products, we pick up our orders year on year. So since the material prices have gone up, so our equipment prices also, we marginally raise it depending on the market situation and all. And the other products, the defense or the rail and metro products, those are all long-term orders which we have received. And accordingly, we have placed long-term orders on the vendors also. So the price is a fixed price. Luckily for us, it has not affected us much, the raw material price, except for the pure raw material, whatever we are buying, the steel or the aluminum. There, some effect is there. But that we are expecting it to cover it up. Like last year also, it didn't affect us much. If you see our margins and all, it has grown quite a lot. We are doing lot of things. We are trying to find out alternate vendors. We are exploring the government e-market also. And that way, and plus we are trying to give some benefits of quicker payments and reducing the bank guarantees and all to the vendors. That way we are able to maintain the price, and we are hopeful that this year also we'll be maintaining the same amount of margin.
Okay. Let's also understand then, Mr. Banerjee, what the outlook is when it comes to your order book. It was at about 9,000 crores as on April 1st. What is your targeted order book for the year?
If you see, we got an order of a rope shovel, 20 cubic meter rope shovel. That's around 118 crores from Coal India. That's a development order, and we'll be doing for the first time in the country. So that is under progress. Then further, we have received another extension order of the Kolkata Metro project. We have received a 3 train sets order. So that's valuing almost 198 crores approximately. So beyond this, the Delhi Metro RS17 tender is yet to be opened. So we are hopeful of getting that. Further, Bangalore Metro tenders are expected. And even the Patna Metro tender is also expected shortly. If we see the defense sector, yes, there also we are expecting some more high mobility vehicle orders. So we would like to keep our order book somewhere around 11,000 to 12,000 crores.
11 to 12,000 crore rupees. Now, you had indicated in our past conversation that the divestment process is in advanced stages. The Ministry of Corporate Affairs will be giving you the nod soon, but then there were news reports that it has been delayed. So, what exactly is the update, and will we see 40 acres of your land in Bengaluru and Mysore be demerged into a separate entity?
Yes, it is not delayed. Actually, one more meeting is there, which is scheduled in the mid of this month. Subsequent to that, Ministry of Corporate Affairs is going to give us the clearance for the scheme of arrangement. And then the lands will be slowly, it will be moved into the new company. Of course, there are certain other clearances which are pending. That is, with this, we need to take a notice of no objection from the state government also. So that's under process, and we are hopeful that will happen shortly. The lands will be moved into BEML Land Assets Limited.
So would you be revising your guidance of 5,000 crore rupee revenue from operations, and are you on track for that 15% growth?
See, this financial year, we are planning for 5,000 plus, but maybe we will land up somewhere around 4,700 to 4,800. That will be again another 15% growth as compared to last financial year. But yes, it all depends, like along the year, how it progresses. We may cross 5,000 also. Our plan is to cross 5,000 this financial year.
And good luck with that, Mr. Banerjee. Thank you so much for taking the time out. We'll slip into a